It's time.
Wealth is common sense. You need to ask simple questions. If you don't know how to deposit your money, you're also not going to know how to withdraw your money. Anticipate opportunities. Very important. I've stood in front of grateful people. I've stood in front of multi-billionaires. But I realized that in that day, when that moment came, I was ready. I did not get ready. I stayed ready.
Ladies and gentlemen, it's an honor to be standing in front of you once again this beautiful evening. And I appreciate every one of you that is here tonight. And I'm sure you're going to get value this evening. For those joining us online, I also appreciate your presence and your effort in making a decision to change your lives. Tonight is going to be a very wonderful evening, and we're going to have a great time. Are you guys with me here today? Yes, we want to have a great time today whilst we learn. So without wasting so much time, we're going to be going into what we're going to be studying today. We're going to be looking at the FX markets. So first of all, we will start by laying the groundwork. There are four major things we're going to be talking about this evening. Four major things. We're going to be laying the groundwork for the FX markets. And then after we're done doing that, after we're done laying a foundation, we're going to move on to understanding the importance of value and what opportunities are present to you when you can get into the FX market the right way. So we're going to talk about the different opportunities present to you that can add value to your life potentially and help you also create a successful FX business. And then after that, we're going to also talk about the billion-dollar industry known as the proprietary firms. You know, we're going to talk about their importance, and that's how that is going to help you guys in starting up your career in the FX market and also giving you a kickstart and an advancement in how you should operate in terms of the market. And finally, we're going to end with exactly the roadmap to 7 figures. Are we all here tonight? So I'm going to start first by quickly giving a brief definition. And if you've got your notepads, I want you to be writing with me because we're going to be looking at things in details. For those online, you can use your electric pads and write alongside with me. You will be patient with me for the advanced people because I know that some of the concepts we might talk about might be for beginners, but we have to first address the importance of beginning in the markets. The things that are relevant for beginners. The beginners. We want to begin with the beginners. And from the beginners, we're going to go into the advanced persons. And from the advanced persons, we'll go into the intermediate. Are we all here tonight? All right. So first of all, we want to start by knowing what is Forex. What is Forex? I'm sure you've heard this word a dozen times. You've heard it a million times, Forex. So we want to know what is Forex. So it's simple. Forex is a global financial market that allows us to trade currencies. And then I want you to put in brackets money. Now, for those of us that were here for the seminar yesterday, we discussed wealth and we understood that wealth is not really money per se, wealth is resources. But tonight we want to learn how we can create resources. So the FX market is just a channel or a pathway for you to do what? Create what? Resources. Are we following? That is why the definition of this ends with what? Money. It's important for you to know that because we want to talk about how you can create resources. Money is just resources. Gold is resources. Silver is resources. And all these things, we trade it in the markets. Are we following? So now, we're going to break down this definition so that we can really understand what Forex is. The first we're going to be breaking down is the word global. Someone say global. Now, the word global means that you can trade it from anywhere. I want you to be writing because this is why Forex is one of the biggest opportunities in the world. It is global, meaning that regardless of where you are, as long as you've got an internet connection
and you've got a PC or a phone, you can trade Forex from what? Anywhere. Are we following? So it's not restricted to your location. It's not also restricted to your country. It's not restricted to your environment. As long as you have access to the internet and you have a phone or a computer, you can trade Forex anywhere. Are we following? All right. Now the second thing we want to analyze is the word financial. The word financial. This means that the Forex market deals with currencies of countries. Currencies of countries. Also, it can be combined with metals in the world. So we can see crosses that have metals in them, but mostly we deal with currencies of countries. So that must make you understand that the FX market is a very large market. We're looking at the currencies of an entire country. Of an entire country. So each time you think about the financial markets, each time you think about Forex, I want you to immediately think about currencies of an entire country. That way you don't get into it playfully. That way you are serious about it. Because it's a whole nation. A whole nation. An entire territory. An entire kingdom like the United Kingdom. We're dealing with the currency of that country. So when we talk about the FX market, I want you to think financial market. Because it's dealing with the economic situation of that country. It's dealing with the gross domestic product of that country. It's dealing with the consumer index of that country. So these are important things that affect the financial market. This is very important. Remember, we are just breaking down the definition of Forex. We said it's a global financial market that allows us to trade currencies, which is money. Now, sometimes those currencies can be traded with other currencies. Sometimes they can be traded with spot metals, like gold or silver or platinum. But the currencies are what is important. I want you to hold that first in your mind. We are first looking at the currency. So when you look at the currency, you're looking at a country. Are we following? So it's a currency and a country. We cannot separate the two of them. If we're looking at the pound, we're looking at what? London. We're looking at the United Kingdom. If we're looking at the dollar, we're looking at what? US. Are we following? So each time you think currencies, first of all, think global. You can do it anywhere. But secondly, it is attached to a country. So it is a financial asset. That's very important. And it's going to play a role in this lecture. So I want you to be following me. Now the third thing we're going to be talking about is markets. Which one is my favorite? Let me see. Market is my favorite. It's my favorite because it involves two very simple things. Which is, I would like to first ask, do we know what happens in the market? When you go to Wednesday market, what do you do at Wednesday market? We buy and what? Sell. Beautiful. You guys are following. I love that. Now, buying and selling is the crucial activity that takes place in this market. Now, sometimes people try to complicate the FX market, but tonight I'm going to make it very simple so that even the layman can understand what the FX market is about. It is simply a global market, which we can trade anywhere, that involves the currencies of nations that we can also go to buy and sell. So the same thing you will do at any market is the same thing we are doing at the FX market. We are simply just what? Buying and what? Selling. But the assets that we're buying and selling are currencies and crosses of those currencies with precious metal. Are we following? So it's just currencies that we are trading. That's all. We're not doing anything strange or anything out of the ordinary. We are just doing what? Buying and what? Selling. This is so, if you can understand this from this point on, every other thing is going to be easier. Because sometimes people try to complicate this. We're just buying and selling. It's not complicated. It's what we do every day in the market. I'll even give you a very decent example, which is, I don't know how many of you have gone to the exchange office to make an exchange in the last week, in the last month. Can you raise your hand? Last week or the last month? When you went to that exchange office to handle an exchange, you were trading Forex. Because right at the counter there, you bought and sold a what? A currency. Are we following? I want this to be as easy as possible to understand. Because if you understand this, from this point on, you can be able to see why this is the biggest business in the world. Why this right now is the greatest opportunity for anybody of any class, of any sociology, of any degree, of any illiteracy or literacy to be able to make profits. Because it's just simply buying and what? Selling. Even the woman that sells Gary in Onisha, she's doing what? Trading. Because you need to give her money to get her what? Product. As long as currencies, very important, because it allows us to do what? Trade what? Currencies. That's what it allows us to do. It gives us that freedom to trade currencies. Are we following? So it's very important. If you can understand this, every other thing this night is going to be easier. So it's just simply a global market where we come to do what? Buy and what? Sell. Now, I know some of you seated here are advanced persons, so you have to bear with me because I need to cover every basis, beginning with the beginners, and we're going to go to the intermediates, and then we're going to go to the advanced persons. So we need to cover the foundation for beginners seated here tonight that know nothing about the markets. So now that we have talked about what Forex is, we're now going to talk about why we see charts on the screen. Because I'm sure if any of you, all of you seated here tonight are here because you are interested in the markets. Is that not so? You are interested in what? Forex. So at some point, you must have seen people with screens that look like this. Yes? Is that so? With something that looks like a line chart going up and coming down and going up and coming down. Is that so? So tonight we want to talk about what this is. What creates this chart? What allows us see these prices, and we're going to talk about it tonight. So it's very simple, it's not complicated. It follows the same laws as the laws of supply and demand. When you plot a supply and demand curve, for those of us that studied a bit of economics in school, I don't want to go too in detail, but when you plot a supply and demand curve, the first thing we look at is the price, right? And then we look at the what? The quantity. Is that so? So we look at the price and we look at the quantity. So there are two measures that give us a supply chart or a demand chart. Are we following? Now, in the FX market, it's no different. We have two factors that give us a chart in the market. The first is price. The first is price. I hope we're writing. The first is price and the second is time. Now, I believe this is what we're going to call our x-axis. And this is what we're going to call our y-axis. This is very important for every beginner and everyone in the foundation of learning to trade because you must understand how to plot your chart. I'm sure you must have seen it somewhere at some point in your research of learning to trade the markets. So we need to know what exactly it is. What is a chart? What is a chart? Now a chart is simple. It's made up of prices and time. So we are measuring what the price is at any given time. We're measuring what the price is at any given time. So down here we have the time, and here we have the prices. It can be in dollars, it can be in euros, it doesn't matter what it is. So this is what creates a price chart. That is it. It shows us in active time, in real time. So now we have what we call currency pairs, which we're going to talk about briefly. Now there are some major currencies in the world, but I want to establish this for every beginner. Any currency that is crossed with the dollar becomes a major currency. I'm going to say it again. Every currency that crosses with the dollar becomes a major currency. So we have the euro, and if the euro crosses with the dollar, we have the euro dollar, this becomes the major of the euro. Because the euro is what we call the base currency, and the dollar is what we call the quote currency. The quote currency. So in currencies, this is how they trade. A currency cannot trade on its own. It must always trade as a cross. Do we understand? It must always be attached to something because you are measuring one value against what? Another. Are we following? What is 1 euro in measurement to what the dollar is? And I'm going to give you guys a very clear example so that you can understand truly what trading is. So trading will always measure one value against another. Even in the days of Jesus, when they traded, they always traded, it was called trade by barter. Right? So it meant you gave me something that I wanted, and I give you something that was equal to the value of what you had. Are we following? So trading did not start today. Trading has been there since the days of Christ, even before he came. Because there will be always something that is more valuable that somebody needs, and they always have something that is valuable that another person needs. So before an exchange, that's why we call it the term Forex. Then we see Forex. This defines foreign what? Exchange. foreign, and this is what? Exchange. So number one is two things that are foreign. They are foreign to each other. They might not even have any relation. The way the U.S. is all the way in the south, in the north side, and then we have the European nation all the way in the south. So they are so far from each other. So they might not have anything to do with each other. Their economies might not have anything to do with each other. That's why we call them foreign. But then sometimes they may need to exchange value. For example, a U.S. company may need to purchase a company all the way in Europe, right? And then in order to purchase the company in Europe, the Europeans would demand that the US company change their currency to euro in order to buy a company in Europe. Are we following? Now this thing I just described to you is a real thing. It's called mergers and acquisition. And this is something that moves the market massively. I hope we're taking notes. It's called mergers and acquisition. Now anytime that is made, currencies move dramatically because an exchange is being made. So if you watch out for these news announcements, when mergers and acquisitions are about to happen, where companies are about to be purchased, you can be able to timely take opportunity of when currencies will rise or fall. Because companies are purchased all the time. A company in US can purchase a company in China. You know, a company in UK can purchase a company in Europe. So it happens all the time. Companies purchase other companies. But when that happens, an exchange is made. So do we understand why we call it Forex exchange? The foreign exchange, because two things must always be exchanged. So when we come to a price chart, because that's why I'm explaining the concept of an exchange, when we come to the price chart, we also have two things that are exchanged because we measure their value with each other, right? The relatability of these two assets is also what we use to measure their value. So if that is the case, anything you see on this chart, this is a rule that you must write. Anything you see on this chart is the equivalent of 1 euro, one of the base currency. So if what we have on this chart here is $0.5, it means that 1 euro is equal to what? 0.5 what? Dollar. And what you see on this side of the axis, which is the y-axis, is the price of the quote currency. Are we following? So each time you look at this chart, what you are seeing on this side is the price of this. The dollar measuring the value of the euro. So if for any reason you hear that the euro is rising, you will come to this chart and you will discover that this chart is going up. Because it simply means that 1 euro, this will never change, one of the base currency. Each time you look at a price chart, because I'm sure you guys have seen a price chart before, it simply means no matter what asset you see on the price chart, it simply means one of the base currency is equal to so amount here of the quote currency. Are we following? So if this price here is $3 and it rose all the way to $3 right here, right around here, it means at this time, when you come and look at this chart, 1 euro is equal to what? 3 what? Dollars. Are we following? So each thing you see on this chart is just a replica of the relationship of these two crosses. Do we understand? So if for any reason I should change this, let's assume I change this to the British pound, and in case, for those of you that don't understand why I'm writing this, these are the symbols for these currencies. The GBP is the symbol for the British pound. Now, if I should write this, this simply means that £1 on this chart is equal to a certain amount here for the dollar. Are we following? So it will always be one of the base currency. We call this the base currency. It is the currency on the left-hand side. And we call this the quote currency. The quote. You can say this one is the greater one. You can say this one is the lesser one. But one of the greater one is always equal the amount of the lesser one. That is how this chart operates. So that the next time you see an FX chart, you should understand exactly how to read it as a beginner. What am I looking at on the chart? If I see a chart moving this way, what am I looking at? It's simple. It's one of the base currency equal to a certain amount on the y-axis of the quote currency. So every time you look on this side, all you are seeing, the prices you are seeing here is the amount of the what? The quote currency. Are we following? On any given chart. It does not matter what the chart is. This could be the euro, this could be the pound, this could even be the Swiss franc. You know, it could be any currency. But as long as it's on the left-hand side, it is the base currency. As long as it's on the right-hand side, it is the quote currency. And you must know that on your charts, you are looking at the quote currency on the y-axis. Are we following? So this is very important. When you plot a price chart, you must be able to read it. You must be able to read a price chart. So I want you to understand the foundation of how these charts are made. They are made with price and they are made with time. I know for the advanced persons, they are saying, when can we get to the interesting stuff? We are getting there. I need the beginners to follow along. Are we here? All right. Now, the next thing we're going to be looking at is brokers. We're going to be looking at brokers. Everything I'm telling you right now is very paramount to your success in the markets. We're going to be looking at brokers. Brokers. So who are brokers? Who are the brokers? Who are the brokers? This is very important. Now, in simple terms, I'm going to define it simply. The brokers are financial entities that connect us to liquidity providers. They connect us to liquidity providers and they hold the money we trade with. Very important. Very important. So brokers are financial entities that connect us to the liquidity providers. Now the liquidity providers are quite important because the reason why the FX market is the largest market in the world is because whenever you want to buy, there is somebody to sell to you. Are we following? If you go to a normal market, sometimes you want to buy something. I don't know if you've been in that position before, but you can't find somebody who is selling it. Have we been there before? Right? So that is called liquidity. When the thing you want to buy is not available for you to buy, that is called low liquidity. There is no liquidity in that market. You know. Now, also it's the same thing. If you want to sell something, but there is nobody to buy it, that is also a lack of what? Liquidity. So, one of the reasons why the FX market is the biggest market in the world is 24 hours for 5 days in the week, there is always somebody available to buy what you have to sell. And there is always somebody available to sell to you when you want to what? Buy. And that's why we call them liquidity providers. These people are the banks, they are the investment firms, they are the large hedge funds, multi-billion-dollar corporations, and they provide liquidity for the markets. Now the truth of the matter is we can't get access to them because these are big financial players. They are controlling the majority of the money moving around the world. So you can't get access to them. They're not individuals. They are financial what? Entities. They are institutions, investment banks. So you can't get access to them. So in order to trade the market, we need a way to get access to them. Is that not so? If they are so big and mighty that we can't reach them, we need a way to reach out to them. And that way is called the brokers. The brokers. The brokers are the link that connects you to the what? The liquidity provider. So if I want to buy, I need a broker's platform to buy. If I want to sell, I need a broker's platform to do what? To sell. Because he is the one that connects me to the liquidity provider. So that the moment I hit my button on my mouse, or my keyboard, or on my phone to buy, immediately somebody is there to what? Sell to me. Regardless of the quantity I want to buy. Whether it's $1 million, $3 million, $4 million, there's somebody there to sell that to me. Immediately. Are we getting why the FX market is the biggest market in the world? And this happens 24 hours every day, 5 days in the week. That's why it's the biggest market in the world. Wednesday market where we go to shop is only on Wednesdays. Is that not so? No other day in the week. So every other market is limited. Every other market. But the FX market trades 24 hours every 5 days of the week. Now we even have crypto markets that trade in the weekends. So we can say that the FX market trades 24 what? 7. Because crypto trades on the weekend. And crypto is virtual money. So it is also a currency at the end of the day. It's still a currency. It's just not fiat money. Fiat money is a currency that you can touch, you can exchange in real time. But crypto is virtual money. But it's still what? Money. Are we following? It still holds a what? A value. And that's what we trade. We trade value. Because remember, the currencies must trade as a what? As a cross. They cannot trade alone. A currency must trade as a cross. It's the euro trading against the dollar. Are we following? It's the pound trading against the what? The dollar. So currencies must always trade as a cross, not on their own. That is the reason why we have the Forex exchange, the foreign exchange. There must be an exchange. So I want you to clearly understand this. Now, not only do they provide us access to the liquidity providers, they are the ones that also hold the money we trade with. Because when you want to trade, you have to put your money somewhere. Are we following? You must put your money somewhere. You're not trading with virtual money. You're trading with what? Real what? Money. So you must put your money somewhere to trade. In order to trade, your money must be trading somewhere. So the brokers are the ones that hold the money we trade with. It is their responsibility to hold it. Now, I know for some of you, you're asking yourself now, someone else holding my money is a bit scary. Isn't that so? It's a bit scary. Someone else holding your money. But that's the only way you can trade, because they are the only ones that give us access to the what? The liquidity provider. And we need that access, even though we can't trade. You know, even though you have to start going door to door to find somebody that has the dollar for the value you want to trade as well. And that's not necessary when we can connect to them in an instant. Instant. The moment you click the buy on your computer or click the sell on your phone, immediately somebody buys. Immediately, somebody on the opposite end sells. That's the liquidity provider. So now, if we understand that the broker's job is to, number one, connect us to the liquidity provider and hold the money we trade with, then there is a second important thing, which is how do we find the reliable what? Brokers. Are we following? I want you to be following me tonight. We're still in the beginners. Everything for now is for the beginners, for my beginners, because I need you guys to follow along. We need to lay a foundation. That's the first thing we want to do today. We want to lay a foundation for us to begin in the FX market. Before you start in the FX market, we need to lay a foundation. So now, there's only one way to verify if a broker is trustworthy, and that is finding out. This is where we incur a bit of research. Of course, after the event, I'm going to tell you the broker I use. But you need to find out, this is for you to be able to do it on your own. You need to be able to finding out if the broker is licensed with a financial regulatory agency. This is the only way to find out if a broker is reliable. You must find out for yourself. Go online, search the broker's name, and search for their license number. The broker must be licensed with a regulatory agency. And we have major regulatory agencies in the world. We have the FCA for London. We have the ASIC for Australia. We have this is the FCA, the ASIC. We have the CYSEC, which is the Cyprus Security Exchange Commission for all the brokers in Europe. Are we following? So before you put your money with any broker, they must be regulated with a regulatory agency. We also have a body that governs the regulations for the United States as well. But I usually don't work with those bodies because they have a lot of limitations. But any of these brokers that you work with, they must be, if you're working with a broker from London, they must be regulated with the FCA. If you're working with a broker from Australia, they must be regulated with the ASIC. If you're working with a broker from Europe, they must be regulated with the Cyprus Securities Exchange Commission. And you must find their licensing number, because sometimes the licensing number can expire, right? So you need to find it and make sure that it's still current before you can put your money with any broker. Are we following tonight? This is very important. You must find out if the broker is licensed with a financial regulatory agency. This is very, very important. Now, there are other little factors that are also variables that you should check out for. For example, the method of deposit. How do you deposit the money into the broker? Is it available for you? Is it not available for you? If the method is not available for you, obviously you can't work with that broker, right? Because there are some brokers that only require you to use your card. Some brokers give you more options, more room. So these are little things you check for, but they are simple things. Withdrawal, deposit, how does it work? Very important. You ask the simple question. Like I said, I taught this yesterday, on Tuesday. You know, wealth is common sense. You need to ask the simple questions. If you don't know how to deposit your money, you're also not going to know how to withdraw your money. So these are simple things you need to check out for. But the first thing to know if a broker can be trusted with your money is make sure that they are licensed. Because every licensed broker must have their money. I know some of us know about car insurance, yes? We know about house insurance. There is even life insurance. But money can also be insured. So before you put your money with any broker, you must find out if they are licensed. Because if they are licensed, it means that their money is insured by an AA plus rated bank, which are usually the central bank of their country. Are we following? So if a broker is licensed, their money is insured. So no matter what happens to them, even if they go bankrupt, your money must be refunded. Are we following? So they must be having their money insured by an AA plus rated bank. So for the FCA is the Bank of London, the BOE, the Bank of England. For the ASIC is the Bank of Australia. For the CYSEC is several banks from Germany, Frankfurt. We have Italy, the Italian bank. We have even the Bank of Japan, BOJ. So, but their money must be guaranteed. And the only way to know if their money is guaranteed is if they have a running license. So always check their license to make sure that it's still active, because it can expire. They pay a lot for it. Sometimes we're talking about $50,000 a month in order for them to get a running license. But of course, they make a lot of money from it. But you must always make sure that their license is what active and what running. This is very important. Are we following tonight? All right, now let's look at the next thing, which is we're going to look at now. I believe these are the important concepts that every beginner should know. You should know what the FX market is. You should understand how currencies trade. And the next time you look at a price chart, you should know exactly what you are looking at. It is one of the base currency equal to a certain amount on the chart of the quote currency. This is very important, very paramount for us to know. So with that, I think we have covered most of the difficulties that the beginners have when looking at the markets. Now we're going to be going into the intermediate persons. The intermediate persons. Now, this is the section for the intermediates. The intermediates. Now, in the intermediate section, we're going to be looking at about three things. We're going to be looking at three things this evening. The first is we're going to be looking at the importance of value. Importance of value. Now, under this, we're going to be discussing those three things. The importance of value for the intermediate persons. Now, there are so many experiences that I personally have had in the FX markets. So many experiences. I've been trading for about 7 years now. This year is going to make it the 8th year. Now, I want you to understand something, that value is the only thing. I will say this again. Value is the only thing that attracts wealth. Are we following? Value is the only thing. There is nothing else in the world. And I'm going to prove it to you right now. There are only three ways in this world that you can make wealth. Not get rich. Because anybody, as I taught you on Tuesday, anybody can be rich. But not everybody can be what? Wealthy. So there are only three ways to create wealth. The first is going into sales or online businesses. Going into sales or online businesses. I've been privileged to read a lot of books in my time, So there was a time I used to read almost 250 books in a year. But I learned a lot in those books. I found a lot of knowledge, a lot of information. But tonight I want to give you free access to this information. There are only three ways. It is never going to change. Only three ways to be wealthy. The first is making sales or online businesses. The second is real estate or flipping houses. Flipping houses. I'm going to explain how they all work, so that whichever one you want to go into, you can. Only three ways to make wealth. Tonight, however, our focus is on the third one, which is trading / investing. Only three ways. And there's a reason why these three ways are paramount. Now for sales, in our next seminar by next month, we're going to be talking more about sales. I'm going to teach you guys about sales. Because sales is one of the ways you can be wealthy. But now, sometimes, or most of the time, when you want to go into sales, you require capital. Also, when you want to go into online businesses. And I'm talking from experience because I did most of the online businesses you can think about. I did affiliate marketing in 2016. I did pay-to-clicks. I did capture entries. I did data filling. So many online businesses. Now, a lot of them require a good amount of startup capital. If you don't have the startup capital, you're going to take a long time to build it if you want to go the route of online businesses. So it is possible, but it's capital intensive. It's very important. Also, making sales. Same thing. Capital intensive. Because you must learn how to make sales before you go and make sales. You must learn it. And that's going to cost you. It's going to cost you. Now, second is real estate. Now, you might ask why sales is so big. Why do sales produce millionaires? Well, it's quite simple, really. I mean, most of us seated here right now, we have phones with us. Is that not so? We have phones with us. I'm sure back home, some of us have laptops. There are companies that produce that. And in order for those companies to make profit, they have to sell it to you. They have to get it to your hands. So Apple, Microsoft, all the biggest firms in the world you can think about, Amazon, they just make sales. That's all they do. They are good at making sales. Yes, they are. So when you can understand the power of sales, it's easy to create wealth. Sales is one of the ways to create wealth. Now the second is real estate or flipping houses. Now of course with real estate, we all know that requires capital intensive. It's very capital intensive. However, if you want to flip houses, it might not be as capital intensive, but you still have to count the cost for flipping houses. And it's quite simple. I'm going to explain to you guys now because like I said, I know a lot of things. Now, flipping houses is quite easy. You get a contract from a person that owns the house, right? Under that contract, the person loans that house to you for a certain amount of time. It could be 2 weeks, it could be 3 weeks. Now, under that time of ownership, you can change the documents in the house to say that you own it because you took it under lease. Now, you will tell the owner that in that space of time you want to sell the house. He's going to tell you how much he's going to charge you. It could be $3,000, $5,000. It's your choice to sell the house in that period. If you succeed in selling the house, the owner will tell you exactly how much he wants to take from that money. And then whatever is on top of that amount is yours. So if the owner tells you he can sell the house for you for $50,000 and you end up selling it for $100,000, the extra $50,000 on top of it is yours. Are we following? That is called flipping houses. Now for you to do this, you will also pay a hefty price in owning that house for 2 weeks, in owning that house for 3 weeks. And there is still the probability that after owning the house for that period of time, you still don't sell it. Are we following? So it's a big risk. But however, these two ways are methods for you to make wealth. I know them to work. But now, there is the third. And why are we interested in this third tonight? Because we're talking about the importance of value. Why are we interested in this third tonight? Trading. Why is it interesting? Now, trading is the only business on this list. In fact, I will make it more specific. The FX market, Forex. Because when you look at trading, we have stocks, we have commodities, we have indices, we have shares, yes. I can see knowledgeable people in the house. We have shares, we also have bonds, we also have futures. So you can tell that there are several financial assets that trade in the FX market or that trade in the foreign exchange market. Now all these financial markets are big, they are massive. Some of them turn over $200 billion in a day. Some of them turn over $480 billion in a day. And I'm sure in your mind you're like, that's a lot of money. Well, wait until you hear how much the FX market turns over. In a day, the FX market turns over a total of $6.6 trillion every what? Day. Every day. Not every month, not every week, not every year. Every day. So I want to tell you the amount of volume that is being traded in the markets. It's so much. Meaning that there is money for everybody. Even if you should make $1 million in a day, it still remains 6.6 what? Trillion dollars. Because it takes 999 billion to make what? 1 trillion. So even if you make $1 million in a day, the FX market turnover still remains $6.6 trillion. That is the kind of market we're talking about today. But that's not only the interesting part. There is something that's very interesting about this market, which is, it is the market that requires the lowest amount of startup. I want you to write that down. The lowest amount of startup. In the FX market, you can start up for as low as $50. The lowest amount of startup. In this list of all the ways, and I will repeat it again, these are the only ways for you to become wealthy. There is none other in the world. Either you are going into sales and other forms of online businesses, or you're going into real estate and flipping houses, or you are trading and investing. There is none other in the world. Only 3 ways to be wealthy. But why is this the one that is the most attractive to us tonight? Because it's the cheapest to get involved in investing. If we know for a fact that you can only get wealthy by these 3 ways, it makes sense for us to find the cheapest way to do what? Get involved. That's not going to cost you a lot, but still, you can immense wealth. This is very paramount, very important. And I'm going to prove it to you this night. I'm going to show you. It is the only, I will repeat it again, the only way. In fact, right now we even have brokerage firms, which we talked about earlier, that take as low as $10. Now, I will not advise you to go with any of this. I would say you should go with the firms that have a minimum of $250. Now, there's a reason for that, because most of the firms that are licensed will always go for $250. Now, it doesn't mean that there are licensed firms that will not go for lower, but most of them will go for $250. But can we agree that $250 is still an affordable amount? Is that true? $250, it's for the average person. That is still an affordable amount. My first successful account was $500. $500 in the year 2016 and 2017. And over a period of 1 year span, I took this 500 to about $10,000 in 1 year. 1 year's time. So I want to show you how practical the market is. It's very practical. But it will never change. It still remains the cheapest way to get involved in what? Investing. There is none other. For you to get involved in the bonds market or in the futures market or trading physical commodities, you must have the tens of thousands of dollars. But this is the cheapest. The cost is low. So when you want to invest, it's good to go for low cost, especially when you're doing what? Learning. Are we following? Especially when you're learning. That's what makes the FX market stand out. That it has a low cost of startup. Because we're talking about the importance of value tonight. Are we following? The importance of value. Now, we're going to go into the second thing, which is, because we are still in the intermediate section, I'm trying to save time as much as possible. We're still in the intermediate section. Now we want to talk about how you can create strategies. Because I'm sure you must be asking yourself in your mind, hold on, I'm getting the hang of it. You know, the FX market is looking interesting. This is looking very exciting, but how do we trade the markets? How do we trade? You know, I mean, I'm loving this, but we've got to know how to trade. How to trade. So now, whenever you come to trade the market, you must trade with a strategy. You must trade with a what? A strategy. Now, in our workshop, because we're going to be having a workshop after a week's time, we're going to look more deeper into strategies. But I'm going to give you guys a secret tonight. When you want to create a strategy, it's not difficult. I'm going to tell you how to create a strategy. Now, I've taught you guys about a price chart, right? I've taught you about the price chart. So you know how to read a price chart. Is that so? You can read it. You can tell what is going on the chart. You can tell that the x-axis represents what? Time. And the y-axis represents what? Price. So right now, as you are seated here, you can read a price chart. And you can also tell that whatever you are seeing on the chart is a representation of the currencies of two what? Countries. So if you see the euro dollar, it's a representation of what? The European currency and the what? The US currency. Are we following? The exchange of both of them. So one of the base currency equals to a certain amount of the what? The quote currency. Are we following? Now, something is very important now. Now that you know how to read a price chart, creating a strategy is easy. All you have to do is go to your price chart and look for patterns that repeat themselves over and over again. I'm going to write it down. Patterns. Because people have been trying to crack this code for so long. People have been paying so much money online to learn this exact thing you guys are learning now. But that ends tonight because we have online viewers watching us. I want people to know the truth about the market. I want to expose it so that after tonight you will never spend $1 on anybody that is creating courses. When you yourself have the intellect to do exactly what they're doing. Exactly. And tonight I'll even show you how to do better. Are we following? All you have to do, go to your charts and watch. Every day. Don't trade. Right now you're still learning. Don't trade. No, don't do it yet. Because you want to know how the market works. Look for patterns that repeat themselves. It repeats themselves. Patterns that repeat themselves. Now, these patterns could repeat themselves every week. It could repeat themselves every month. It could repeat themselves every 3 days. It doesn't matter. The time frame doesn't matter. It could even repeat itself in different ways. But first of all, you must establish that it repeats itself. The moment you are able to see a pattern that repeats itself consistently, you have found something. And that thing is called an edge. I want us to be writing. That is called an edge. You have created an edge. And this is how everybody that trades successfully trades. Before you must trade successfully, you must trade with an edge. An edge is very important. Because what happens is the edge allows you to have an advantage in the markets. An advantage. And an advantage is very important. Because if you don't have an advantage in the market, you are a gambler. You're not a trader. Are we following? You are a gambler, not a trader. So you need an edge. And finding an edge is easy. Now in the workshop, during the section of the workshop, I will give you certain edges. I'll give you 3 at least. because I've been trading for a very long time. I'll give you different edges, but I want you to know how to create it. You can create an edge. It's not difficult. You go to your chart, you look for a pattern that repeats itself, and then you use that pattern to create an edge. Go back and check it on the chart to confirm if indeed that thing repeats itself. I will say it again. It must be a pattern that repeats itself. This is very important. And by the time you trade that edge consistently, by the time you begin to see it over and over again, then we're going to talk about indicators. Indicators. Because everybody in the world gets this wrong. Tonight we're going to get it right. For both our online viewers and those that are here. Everyone comes into the market and want to begin to use indicators. They want to use the EMAs. They want to use the RSI. They want to use the Bollingas. So many indicators we have in the markets. And I'm sure some of us here have tried to experiment with indicators as well. We've tried to use them. But indicators don't work because people try to use indicators on their own. You must first combine an indicator with an edge. So first of all, you don't come into the market trying to trade an indicator. Trade an edge and combine the edge with a what? An indicator. Are we following? You might even discover a secret, which I'm going to share with you tonight. Which is, by the time you discover an edge, you might not need the what? The indicator. Are we following? So it is entirely possible to trade the FX market without an indicator. Do we understand this? Because I'm sure all over social media, when you go on social media, everyone is saying, if you want to trade the markets, you need to use an indicator. If you want to trade the market, you need to use an indicator. It's everywhere. You go on YouTube, you want to trade the market, you need an indicator. But you don't need an indicator. An indicator is supposed to be a side piece that works with the what? With the main piece. But if you make the indicator the side piece, you will lose your money. Are we following? You will lose your money. The indicator is the side piece. So if I can get the main piece right, I might not even need the side piece. Are we following? But if you found that you have found your edge, but you cannot see it very clearly, it's still hard for you to identify it, then you need a what? An indicator. Are we following? Because I want to show you how to create this. You don't need to pay people money to please help me create a strategy. No, you can create a strategy. You can. It's in your capability because it's all about repetition. You need to look at the markets and see what repeats itself over and over again. It can be, I'll give you an example now. I'll give you an example right now because I like being very practical. I'll give you an example of a pattern that repeats itself so that we can all understand. Now, for our beginners, that's something I did not touch, so I'm going to just touch it very briefly. In the market, we have sessions. Sessions. Sessions simply means when the banks open to trade. That's what they mean. It's not complicated. Whenever the banks open to trade, that's called a session. Now, we have 5 sessions all over the world. We have a session in London. We have a session in London. We have a session in New York when the New York banks open. We have a session in Australia. It's usually called the session in Sydney. We have a session in Tokyo. And we have a session in Frankfurt, Germany. Frankfurt, Germany. Now these things are informations that are publicly online. That's why it's not very serious for us. But we have 5 sessions in the market. Now, your edge can be very simple. Your edge can be as simple as you coming to the market every London session and seeing that at a certain time in London, our time is 9 o'clock. Sorry, that's for Frankfurt. In our time, London open is 10 o'clock. 10 o'clock in the morning, 10 a.m. in the morning. Your edge could simply be that each time you come 10 a.m. in the morning, you always realize that the euro dollar, always goes to a certain level and falls. Are we following? This simple thing I described right now, this could be your edge. You just came into the market and you were shifting through the chart, and all of a sudden you realize every 10 o'clock, the euro seems to go up and fall. Every 10 o'clock. All you now need to do is know what prices does the market always go to and the euro falls. And what time do you have to be at your screen to take a sell trade? Are we following? That's all you need. Now, if for any reason you have found that edge, because I want to teach you how to trade, this is so simple. You just need an edge, a pattern that repeats itself. That's all. It could be as simple as this. As simple as this. It could even be that each time you come to the chart, you always notice that the euro always does something like this, like a W, and then goes down, and then finally goes up. So all you do is, you come to your chart, you wait for the euro to do this, you wait for the euro to do this, and then you buy here. Are we getting how edges work? You just need a pattern that does what? Repeat itself. When you find a pattern that repeats itself, you found an edge. You need one. Now, if you found an edge, and then you discover that, for some reason, this doesn't always happen at 10. Sometimes it happens at 11 in the morning. Sometimes it even extends to 12 in the morning. Which means you need something to tell you when this is going to happen. You need something else. If that extra thing is needed, that's when you will now go for the what? The indicators. Are we following? So then the indicators will show you, okay, at 10 o'clock, 2 EMAs cross. And when those 2 EMAs cross, the market begins to drop. Are we following? So the indicators now tell you that at this certain time, your edge plays out. But it may not play out exactly. We call that variation to the theme. Variation, which means the same thing is happening, but it's happening at a different time and in a different way. Are we understanding? It's happening at a different time and in a different what? Way. So you need something to tell you when to enter and when to leave the market. That's when you go for an indicator. But never make this your first go-to in trading, because you will lose money. If you want to first start trading with an indicator, you will lose money. You must first find an edge and then attach an indicator to it. If your edge is very good, because trust me, the reason why I'm saying this is I want you to begin to open your mind. It's easy for me to give you something and say, take and use it. But what about if it's you that creates that thing? Is it true that it's easier for you to believe in it? Is that true? If you should create something, is it easier for you to believe in? So I want you to know how to create it. Strategies are not hard. They're not difficult. But you need to find an edge. And all of us here, we are intelligent beings. As we're all looking very beautiful, we are also very intelligent. So yes, we can find patterns that repeat themselves. If you leave this building now and you see stones arranged in a certain way, your brain begins to record the pattern in which they are arranged. Is that true or false? It's true. Your brain begins to take note of how they are arranged. There are some people that their brain can even know the distance between the stones. Yes. So in the FX market, it's no different. Open your chart. In the beginning of the lecture, I taught you how to read the chart. So do you all understand how to read the charts? Now that you know how to read the chart, when you go home, open your chart and look at it. You will begin to see patterns. And the chart, it's so beautiful that the charts are divided into days. It's not random. When you go to your chart, you're going to see that the charts are divided into days. The charts are divided into also sessions. We've looked at sessions now. The charts are divided into sessions. They are divided into days. They are divided into weeks. And they are divided into months. And they are divided into years. Everything we trade in our real life is traded in the FX market. So if that is the case, all we need to do is look within a day. That's all we need to do. If a day is too broad for you, look within a session. A session only lasts for a maximum of 6 hours. Zone into each of the sessions. Zone into the New York session, zone into the Tokyo session, or into the London session, or into the Sydney session, or even into the Australian session. Zone into it and then check for an edge. Find something that repeats itself every day, every week, or every month. Find something. And I know us. I know the human mind. You will see something. You will see, even if it's one thing, it can be very small. It can be very little. But if you can find that thing is an edge. Are we following? This is so important. I want us to get this point right because we are still in the intermediate session. We'll be going into the advanced session very soon. But I need you to get this very correctly. I want you to get this very correctly. Now, if you can do this, at the end of the day, you will have what we call a strategy. Are we following? If you can do this successfully, you will have what we call a strategy. Now, for someone like me, I've been trading for 7 years, going to 8 years now. So I have strategies. Are we following? I have plurals. I have edges. There are a lot of them, right? And in the workshop, we're going to be teaching at least 3 of them. Now, what I want you to know is this. In trading, and this point I want to establish is very important because we're going to reveal a lot of secrets this night. In trading, there are only 2 areas of trading. You can call them 2 areas. You can call them 2 angles. You can call them 2 denominations. There is retail trading, and then there is professional trading. I hope we are writing. Retail trading and professional trading. Now, I'm going to write the differences between these 2 as I also begin to explain them. The differences between these 2.
So we have retail trading and professional trading as the two areas or denominations of trading. Denominations. Are we following? Now, in retail trading, we trade with stop losses and take profits, which are concepts I'm going to explain now for the intermediate persons. We trade with stop losses and take profits, and we also use strategies. Do we understand what a strategy is now? We use strategies in retail trading. And then finally, we also have to update our strategies. Everything here I'm going to explain. Now, with professional trading, it's a little bit different. And for those watching online, we are about to expose the industry once and for all. Oh, Lord knows I've been waiting to do this. Now, in professional trading, we trade without stop losses. That's the first thing that makes professional trading stand out. Second, we don't use strategies, we use methods. And finally, we never have to update methods. I want you to write that down because it's very important. It is very, very, very important. Very, very important. Very important. We use strategies. We're kind of covering the things for the advanced people, but it's all right. I'm sure the intermediate people are catching on pretty quick. All right. Now, I'm going to explain this shortly because the reason why I wrote this is because of this concept here. The stop losses and the take profit. This is something that the intermediates need to know because we've covered the section for the beginners. Now, in the Forex markets, we have what is called a take profit and a stop loss. A take profit and a what? A stop loss. Now, these things are very simple concepts. They're not complicated. Now, a take profit is simply where you are asking the market to close your trade. Because remember, we say you take a trade in the markets, right? You are the one that takes a trade, whether you choose to buy or sell. And I'm going to make it very easy. If 1 euro is equal to $2, I want us to follow this example. 1 euro is equal to $2. 1 euro is equal to $2. And I wake up tomorrow morning and I say, you know what, I'm going to go to the exchange office and I'm going to buy 1 euro. How much will I need to buy the 1 euro? I'll need $2, exactly $2. Now, let's assume I buy that 1 euro, and by tomorrow morning, 1 euro is now equal to $2,000. Let's assume that's the case. If I take this money that I bought, because right now, how much am I holding in my hands? I'm holding 1 euro. If I take this 1 euro back to the exchange office, how much are they going to give me? $2,000. I want to explain trading in the most simple form so that it's not complicated. Trading is easy. Trading is just simply exchanging value. That's all we're doing. So, because I'm teaching, we're still talking about, remember our topic in the intermediate, we're talking about the importance of value. So, which means all I need to know is if the euro is going to rise to what? 2,000 what? Dollars. That's all I need to know. Is trading sounding simpler to you now? It's that simple. That is all I need to know. That is even why I need a strategy. That's why I need an approach to the markets. That's why I need an edge. I just need to know that the euro tomorrow or next tomorrow is going to be what? $2,000. I just need to know that. So that me knowing that makes me valuable. Do you understand? Me being able to have that knowledge, that makes me a valuable what? Person. Because now what happens is this. I want to show you guys exactly the amount of businesses I was able to create with the FX markets. I became a financial analyst, meaning that if firms need people to analyze and break down charts, they contact me.
Tell us, where do you think this currency or this financial assets or these stocks or these bonds or these ETFs or this commodity, where do you think it's going to go? And they pay for that what? Value. Are we understanding value? The second thing I began to do was, I also began to do financial consultancy. Meaning, how much do we invest in this? How many assets do we invest in? How do we diversify our risk? And based on the direction of the market, I can tell them how to do that. That is called financial consultancy. I've stated how many businesses now? 2 businesses. The third is, because I obviously am able to know the direction of the markets, I can also manage what? Money. I can also trade the price of that asset. In this case, we're going to be trading the euro what? Dollar. Are we understanding? The euro dollar. I can go to the euro dollar and place a what? A buy trade. And then once I place a buy trade, the euro begins to fly all the way to $2,000. Are we following? Now, because I have that information, I can also trade it for myself. I can trade it for accredited investors. Are we following? So how many businesses have I stated now? 3 already. Inside one business. The business we are talking about is the FX market. Because I want you today to change your mindset from seeing this as a side hustle to a business. FX is a business. It's a business. If you can see it as a business, it's easy to succeed. We're still talking about the FX business. The FX business. Now, because I also have, because remember, we're just talking about one value, is that not so? One value. I'm not talking about so many things. I'm not going into so many details. Just one value. Because we're talking about the importance of value. I just have a knowledge of where the market is going to be. Just one value. It's now became possible for me to also teach people how to be able to tell if this is going to go in this direction. To educate people, to inform people, to also broaden people's knowledge on trading. So I became a mentor, a coach, and a what? A trainer. How many businesses are we talking about now? 4 businesses. And we're still inside the what? The FX market. Is somebody getting the importance of value? Tonight, I want you to live here with the importance of value. How much can value change your life? Value. Value is everything. If you impute more value into yourself, you become a high-valued person in the society. A high-valued man or a high-valued woman. You begin to change into that. But value is the essence of success. And as we discussed, there are only 3 ways at the beginning of this seminar. Only 3 ways to be wealthy. We're looking at the third. The FX market, because it involves investing. And it is the cheapest way to get involved in investing. The cheapest. Now, the 4 businesses were not enough. I established a 5th. Is it getting interesting? There became a 5th business, which was what? Trading for proprietary firms, which we're going to talk about shortly. People that give you money to manage. They own so much capital, but they're looking for somebody that can manage it. And all they will tell you is, pass our phase 1 challenge, pass the phase 2 challenge, and we'll give you our money to manage. And I went there and I passed their challenges. Their phase 1 challenges, I passed it. Their phase 2 challenges, I passed it. Because I still know how to do what? Tell where the market is what? Is going. Are we following? I want to tell you the importance of value. How much weight does value have? So that after tonight, you understand what the FX market is. It's not gambling. It's not going to try your luck. I succeeded in the market because I converted it into a what? A business. You've got to start thinking that way. If you can see it that way, you can also approach the markets as a business. So now I want us to talk about the stop losses and the take profits. What are they? Now in the markets, we have what we put into the markets to tell the markets when we want to exit the markets with a profit. So there are only 2 kinds of exit. The moment you open a position, because when you take a trade, you see this buy trade that I took here, right? After I took this trade, the market began to move up. Is that not so? Now this buy trade I took here is called a position. It's called a position. Now some people can call it also a contract. It's called a contract. Now the moment you open a contract in the market, remember we said the liquidity provider has to sell to you. If you are buying, the liquidity provider has to do what? Sell. And it's the most liquid market in the world because no matter the volume or quantity you want to buy, there's always somebody to sell to you. Are we following? So there's always going to be somebody to sell to you. So but the moment you open this buy contract into the market begins to move. Now this is where people's emotions begin to dance around. Because you will see the market in loss, you see it in profit. You see it in loss, you see it in profit. Now, we have 2 other orders that we can enter into the market. We can never change the position of this order. It's always going to be here. at the price that we executed it at. So in this case that I gave you now, this example I gave you here, the price that I executed this contract as was $2. Do we understand? So on the chart, it's going to show that I bought at $2. And when it rose up, it rose to $2,000. And my position is going to remain here in the markets. But now, I can also go into the market and put 2 extra orders. Those orders are a take profit and a stop loss. Are we following? The stop loss, which is the one below, for a buy, the stop loss is below. For a sell, the stop loss is above. But it's the same concept, vice versa. The stop loss simply tells the market, if the market should move in a loss against me, where do I close the what? The trade. Are we following? So the stop loss manages your what? Your losses. So if the market moves against you, it does not drain your entire account. Are we following? It does not drain your what? Entire account. You must always place a stop loss. Now remember, we are talking about retail what? Trading. Retail trading. You must always place a stop loss. Now also, invertedly, I could also place a take profit. I can see this place is getting congested. Let's get a bit of space up here. Now, I can also place a take profit. A take profit. Now, a take profit is simply above. This is the order I entered for a buy. And then this is my stop loss, my SL. Now, the take profit does the opposite. The take profit tells the market where I should close my trade if the market moves in what? In profit. Do we understand this concept? So the stop loss tells the market, if the market gets to this price, close my trade. I accept the loss. I was wrong. Are we following? The take profit tells the market, if the market goes in my favor, even if I'm not around, close my trade here. Because I've made a what? A profit. Are we following? So in trading, you need a stop loss and a take profit. Are we following? Because the stop loss limits your loss. The take profit gets you out of profit, even if you're not there. You don't have to close this position yourself. The take profit closes your position. So there are only 2 ways to exit in the market. With a stop loss and with a what? A take profit. And it's the same, I will simplify it. It's either you are exiting the market with a profit or you are exiting the market with a what? With a loss. Are we following? But now this order we put into the market limits where it's going to be. That's why they are called limit orders. It limits where your loss is going to be. You cannot make continuous losses. No. If the market gets here, it closes you in a loss. So if you decide that all I can lose is $10, you put your stop loss at what? $10. So you can never lose more than what? $10. Are we following? And if you decide that the profit you want to make is $50 here, you can never make more than $50. If the market gets here, it closes you out for a what? A $50 profit. And then when you look at your account statement, you see what? $50. Are we following? This is how you trade. So the stop loss limits your losses. The take profit takes you out in profits. Are we following? Now, these are very important concepts to use when you are trading retail. Do we understand? When you're trading retail, you need a take profit and a stop loss. Because remember, we go to the second point. You are trading with a what? A strategy. You are trading with a strategy. So your strategy must have an edge. And I'm going to show you tonight. I want to expose all the secrets. Because there are so many secrets that are in the market that people have been looking at like, why can we not get past this? Why does it seem like this is hard to get over? I'm going to expose all of them tonight. For both our online streamers and those of us seated here. Because indeed, these things are not difficult. They are not difficult. You see, where the task in trading comes, real trading, because I'm going to show you what professional, tonight, I will show you on the computer. I'll show you what professional trading looks like. I'll show you what retail trading looks like. Now, in professional trading, this is where the task is. Because you must be an FX operator to trade professionally. Are we following? In retail, all you need is a strategy. All you need. And you can find a strategy that works yourself. If you cannot find a strategy that works yourself, then there are people like me that already have successful strategies. Are we following? Already, we have found edges in the market over the last 7 years. So many edges. You know, of course, I know 3 that are very powerful. And we're going to talk about it in the workshop. But it's important that we understand, how do we create it ourselves? Are we following? Without me, how do you create an edge? And I want to show you tonight. We first talked about how you can see the edge in the market. We said you go back to your charts. Now you have understood what a chart is and how to analyze it. You go and check the sessions, check the day, check the weeks, and find something that repeats itself as a pattern. Are we following? And if you can find that thing that repeats itself as a pattern, build your edge around it. Where you buy and where you sell, build your edge around it. Now I'm going to show you the second thing you need in building an edge. The second thing you need. Because remember, we're still focusing on what? Retail trading. Are we following? we're still on retail trading. Now, don't get me wrong, retail trading is quite profitable. I did it for 2 years. It's very profitable, but we're going to look at the flaw that it has, which is, this is our last point here. The flaw of retail trading. It has a flaw. Now, in creating an edge, there's a second thing you need. Now we have talked about the concept of stop losses and take profit. The second thing you need in creating an edge is knowing about risk management. Somebody say risk management. Risk management is very important. How do you manage your risk? Because listen, when I started trading, I wasn't the best of traders in the world, but I never lost money. And I know everyone says, when I began to trade, I lost a lot of money, and then I learned how to trade. Or I put in some money and I lost it, and then after a while, I learned how to trade. I never lost money in trading. Never. It never happened. And the reason was, even when I was not a good trader, I was not the best trader, I was a very good risk manager. Meaning that I did not risk too much. And I made it the rule of thumb. Until today, it still works. It still works for anybody that uses it. Anybody that uses it. You never risk more than 1% to 2% of your account at any given time. I want you to write that down. Whenever you open your Forex account, because I'm sure after today, some of us will not obey my instruction and still go and open a Forex account. And that's okay. That's okay. It's all right. No hard feelings. But if you do open an account, never risk more than these parameters. And whichever parameter you choose, for the sake of your strategy you are going to be creating with the stop loss and take profit, make sure that it is constant. So if you say you want to be risking only 1%, risk only 1% for every trade. If you say you want to risk only 2%, risk only 2% for every trade. Are we following? Only, never exceed it. Because the moment you exceed it, you become a gambler, not a trader anymore. Are we getting it? Because trading is so, I'm telling you, listen, when you go to gamble, right? For people that have gambled before in their lifetime, you will put in money, and when you lose the money, you see yourself losing the money. Is that not so? You see them take the money from you. So it pains you immediately. Is that not so? But you see, trading is more addictive. Because when you turn trading into gambling, you are just seeing figures on a screen. Right? It's just numbers. So when you lose it, it does not feel like real money. Because it just went that way. So it's easy for you to carry another one and go and put. To do what? Try again. So you must be this thing I'm saying is so important. You must be careful with risk. If not, you can easily turn trading to gambling. Are we following? So what controls trading and differentiates it from gambling is risk management. You must be good at risk management. And I'm giving you the rule of thumb. Never risk 1 to 2% of your account. The moment you see yourself risking 2.5%, you are still gambling. The moment you see yourself risking 3%, you're still gambling. And there will come a day, once you start making this a habit, there will come a day you will risk 50% of your account. And one day you will surely risk 100% of your account and lose everything. Yes. So are we getting how mindset works? You must keep your mind disciplined. To be a trader, I'm going to say this for the sake of our online viewers. To be a successful trader is a thing of the mind. Trading is really psychological. Anybody that tells you otherwise is lying to you. Everything about trading is psychological. Even if you are not the most skillful trader, but you have a good psychology, you will be a very profitable trader. Because the majority of what we do is in the mind. Are we following? Because things will begin to come to affect your trading, like greed. You will see yourself in profit. You're making $250. And there is that voice on your right shoulder saying, close the trade, you are in profit. But then there will be another voice on your left saying, if it's 250, it can be 500. Are we here? No, because I'm telling you, this is what I've experienced. I leave this. The voice will say, it's 250, this can be 500. And you say, you know what, I'm going to leave it for a bit longer. And then you leave it for a bit longer, and it doesn't even go to 500. It goes to 1,500. Wow. $1,500 in 3 to 5 minutes. Wow. You are already imagining your dream house. Your dream car. Ooh, you travel, so you're imagining things already. Your mind is at work. Now, what will happen is, in a glance, in an instant, because you don't have a risk parameter, because you don't have risk management, that $1,500 can easily turn to negative 500. And then you even lose more than that. And you will remember, you say, there was a voice telling me, close the trade. Close the trade. But you didn't. So if you don't get this part right, it becomes difficult to trade consistently. You will find yourself gambling a lot. And once you fall into that habit, it's difficult to get out of. It's even more difficult to get out of than even physical gambling. Because when you gamble physically, it's easy to lose money. And when you lose money, you see them take it from you. So it pains you. And then somebody can tell you, are you okay with losing money? Are you normal? You know, and then you wake up. But in trading, you are seeing the figures on the screen. It's so easy to lose it. It's so easy to also put it in. It's not difficult. Like I said, we said it's a global financial what? Market. So you can trade it what? Anywhere and anytime. So it's not difficult to put your money into trading. It's not difficult. So you must be careful. You must get risk management correctly. And now I just want to show us a formula that you can use to calculate your risk. A formula to calculate your risk, which works every time. Because all we are doing now is learning how you can build a what? An edge. Are we following? I want to teach you how to build an edge. How to build an edge. So it's quite simple to calculate your risk. It's very simple. It's very, very simple. Now you need to do the total amount in your account. If it's $500, if it's $300, you know, the total amount in your account, you need to know what that figure is. You need to multiply it by 1 over 100. Multiply it by 1 over 100, and then you will get the amount to risk. For those of you that will be a bit bold and want to risk 2%, change this figure here to 2. No longer 1. You can change it to 2. But I would say you should start with 1%. Always risk 1% of your account, never more, never less. 1 to 2%. Now, once you have gotten the amount to risk with this formula, the next thing you're going to do is you're going to do that amount to risk divided by your stop loss. Somebody say stop loss. Your stop loss. Because your stop loss is what tells you if the market goes against you, the Armageddon should happen. The worst case scenario, how do you exit out of the market? Are we following? That's what your stop loss is. So you are going to divide this amount to risk. After you do this first formula here, you're going to divide this amount to risk by your stop loss, and that will give you the trade size you should open. The trade size. Now, I want you to take a minute and write this formula. The total amount multiplied by 1 over 100 is going to give you the amount to risk, which is 1%. And then that amount to risk divided by your stop loss, which is measured in pips. This is measured in pips, which is something we're going to talk about we're going to talk about pips in our workshop during the boot camp, so you understand more of what pips is. But pips is quite simple. It's just a unit of measurement of how far the market moves. If the market begins to move, it moves in pips. Do we understand this? You know, anything that moves has a measure of movement. If you move and walk in this distance, they said you have walked in kilometers, or you have walked in what? Meters. Are we following? You know, if you jump, they say you have covered a height, which is also in meters, or in feet. Are we following? So when the market begins to move, its movement is measured in what? Pips. Do we understand? So now when you get your SL value, your SL value is going to be in pips. And the amount to risk here is going to be in dollars. It can be in dollars depending on what you open your account with. It can be in euros. It can be in pounds. You know, it can be in any of these currencies. But the amount to risk divided by the stop loss, which is in pips, will give you your trade size. Now that we're done writing that formula, and there's a reason I don't want to clean this, because we're going to come back to this. Now, when you've gotten your trade size, I want to show you what your trade size is going to look like. And it's also a formula as well. Your trade size is also a formula. I hope we are done writing. Your trade size is also a formula. I'm going to write the trade size. How do we calculate your trade size? It's very easy. It's not complicated. It's not going to require a lot of mathematics, because I know some of us don't really love math so much. But I myself am a mathematician. I love mathematics. So here is it. Your trade size works this way. There are 3 major trade sizes. Because remember, we said in the example that I showed us of the market going up, we said we're going to take a buy trade, right? We took a buy trade. And when we took that buy trade, we're taking that buy trade with a size. There is the same way you go to the market and you don't just buy everything for the same amount, right? Ekmek is not the same amount as beans. Beans is not the same amount as rice. Is that not so? Everything has different what? Prices. So when you want to trade in the market, you need to trade with a size. So there are 3 major sizes in the world. 3 majors, and then after those 3 majors, the rest are common. We have a 0.01. This is called a micro lot. They are called lots. Lot size. Lot size. We have a micro lot. We have 0.10. This is a mini lot. We are still in the intermediate section. For those of us that are wondering, we are still in the intermediate section for our online viewers as well. Now we're still in the mini lot. A mini lot. And then we have a 1.0, which is a standard. Yes, I can see there are educated people here. Wonderful, wonderful, good. There are people that are educated about the market. That's beautiful. Now, we have a standard lot. Now, why these lot sizes are important is because they tell us what measure and volume of contract or lot size or position we are entering into the markets. Now, leverage is something we're going to talk about in the workshops. But I'll give you a very quick interface. The micro lot measures 1,000 units of the base currency. 1,000 units. So a micro lot represents $1,000. 1,000 units of the base currency. If the currency is euro dollar, it's 1,000 units of euro. Are we following? If the cross is euro USD, this means 1,000 units of the base, always the base currency. Always the base currency. In the workshops, we'll talk about why that is relevant. Now, when we trade a mini lot represents 10,000 units of the base currency. And then when we trade a standard lot represents, I'm sure you can do the mathematics by now, 100,000 units of the what? Of the base currency. The base currency. Now, from the standard lot, we can go all the way down to 10.0, 100.0, 1,000.0. There are a lot of them. But these are the three standards. So every lot lower than the standard lot is also called the standard lot. Are we following? So these are the lot sizes you use to enter the markets. You tell the market what quantity and measure you want to buy. If I want to buy 10,000 units, I go to the mini lot. If I want to buy 1,000 units, I go through the micro lot. If I want to buy 100,000 units, I go with what? The standard lot. Are we understanding this? Now, I want to show you guys where the magic of trading happens. You're going to love this. Because remember, at the beginning of this seminar, we said that the FX market is the cheapest market to get involved in what? In trading. I want to teach you guys something called leverage tonight. Before we go into these points, I want to teach you something called leverage. Leverage. I want you to write down the lot sizes before we go into leverage. Before we go into leverage, the lot sizes, let's write it down. The micro lot, we have the mini lot, and we have the standard lot with all different units of sizes to purchase in the market. Because the same way we buy products and services, that's the same way we buy things in the financial markets. But we buy them in quantity, in volume, and in units. Are we following? All right, are we done writing? All right. Let's move on to, because I want to teach you guys about lot sizes. You know, we're supposed to talk about it in the workshop, but we're going to talk about it now because I want you to understand why the FX market has such a great opportunity to make profits. A great opportunity. Remember, we're still talking about, in the intermediates, we're still talking about the importance of value. Why is the FX market so valuable? Why is it the biggest market in the world, right? We have something we call leverage. Leverage. Now, the broker I use, he gives me a leverage of 1 to 500. For the sake of equality, let's say she gives me also, you know, the broker gives me a leverage of 1 to 500 to trade with. Now, 1 to 500 leverage simply means whenever I'm about to open a contract, because we know what contracts and positions are in the market, right? Those are what we buy and sell with. If you want to take a buy in the market, you open a contract. If you want to take a sell in the market, you open a contract, a sell contract. You want to take a buy, you open a buy contract. Are we following? So that's what contracts are. They are also called positions. Now, when I want to open a position, the broker, remember the broker is the one that connects us with the what? Liquidity provider, right? When I want to open a position, the broker needs to hold a certain amount from me. In order, it's called a trust. Now, in the Forex market, we call it margin, but I want to simplify what it is. It's a trust, meaning that even if you go and do something wrong in the market, I'm holding this amount of your money. If you don't manage your risk, if you don't use stop losses, or if you don't use take profits, and you just leave your position, and it's running in losses, the broker protects himself from making unlimited losses by holding a margin from you. It's called a margin. It's a trust. Meaning that no matter what happens, you cannot lose more than this money I'm holding. Do you understand? So the broker must hold that. Now, the way the broker measures how much he holds is with leverage. So if you are trading with a leverage of 1 to 1, the broker divides, let's assume you open a contract size. I've taught you what contract size are. You open a contract size of 0.1. Let's see if you guys are learning. How many units is this? 1,000 units. Perfect. Perfect. Now, if I should open a contract of 0.01 with a leverage of 1 to 1, the broker is going to divide this. 1,000 units divided by what? By 1. Do we understand? This will tell me how much is required for me to open this position. So if we finish this calculation, we know that it will equal to what? $1,000. So which means for me to open a micro lot, I need what? $1,000. Are we following? I need to have $1,000 in my what? In my account for me to open a micro lot. Are we following? And a micro lot equates to just 10 cents per pip. 10 cents per pip. It's not even up to $1. A mini lot is the one that is $1 per pip. So this just equates to 10 cents per pip, which in our current scheme of civilization doesn't seem like much. 10 cents, it's not so much, but the broker will require $1,000 because you are trading with a one-to-one leverage. Now I want to show you where the magic of the market is. The thing called leverage. It's a beautiful thing. Now my broker, which is a regulated broker, allows me to trade with a leverage of 1 to 500. Now, with 1 to 500, same calculation. I want to open a 0.01, which is 1,000 units. The same 1,000 units, but the broker is going to divide it by what? 500. Are we following? Now, if you divide this by 500, for those that are mathematicians here, how much do I need? $2. This is the amount I need to open a micro lot. $2. Can the average person afford $2? Yes. This is why trading is the biggest. You can afford $2 and you will trade a position that requires $1,000 to open. You require. Normally, I used to call leverage grace. That's what I call it. It's grace. Because you don't have the money. You don't have $1,000, but you need $1,000 to open a micro lot. But with leverage, you can have $2 and you can open a micro lot. So are you guys seeing now why FX is the biggest opportunity in the world? Because we're still talking about the importance of value. FX is the biggest. Even some brokers have a leverage of 1 to 100. Even with the 1 to 100 leverage, you still will just need about $10. Even with the 1 to 100. And the broker I use gives me a leverage of what? 1 to what? 500. But I must warn you. I must warn you. Very important. I must warn. Leverage is a very beautiful tool. I call it grace sometimes. But it's a two-sided sword. Somebody say a two-sided sword. It's a two-sided sword. If you trade the wrong way with leverage, I'm going back to the concept of our risk management, right? If you trade the wrong way with leverage, you can blow your account. Because yes, you are buying, leverage is giving you a stronger purchasing power. That's what we call it. It's purchasing power. You can buy more with what? With less. Are we following? With leverage, you can buy more with less. But because you can buy more with less, if you do not risk correctly, you can also lose more. With what? With less. Are we following? That is why you must always calculate your risk. And I've given you the formula to calculate the risk, right? Can we remember the formula? Yeah, I'm sure when you go home, it's going to sink in deeper. All right. Now, we have covered what a stop loss and a take profit is. Now we're going into the advanced persons. The advanced persons. We're going into the section for the advanced persons. We are done with the intermediates. We've talked about risk management. And one thing I must add in the intermediate. We have 3 ways of trading. Call them 3 styles. In this, we are looking at the areas of trading or the denominations of trading. But we have 3 styles of trading. So when you find your strategy or your edge in the market, it will only fall into one of 3 categories. Or one of 4 categories, rather. The first one is not very, very obvious because people don't trade like that so much, except some of the greatest traders in the world. It's called position trading. Position trading. This requires, we're still in the intermediate section, it requires that someone trades for months to years. Months to years. Which means, you see where we open our contracts into the market, you can hold the contract for 1 year. You buy and you hold the buy for 1 year. I've done it in crypto before. That's called position trading. You hold the trade for a very long time. You can hold it for a year, you can hold it for a month, you can hold it for months. You can hold it for a quarter, you can hold it for half an annual cycle, which is 6 months, but a long period of time. That's called position trading. Then we have the people that are called swing traders. Because all this I'm telling you, all these secrets I'm revealing, is because when you go into creating your edge, you should make sure you fall under one of these. That pattern that you watch in the market that repeats itself, make sure it falls into one of these cycles. That is how you know you have found an edge. Are we following? Now, in swing trading, you hold trade for 3 days to a week. 3 days to a week. Now, sometimes it can extend into weeks, but very rarely. Maybe 2 weeks maximum. But 3 days to 2 weeks. Any trade you hold for 3 days to 2 weeks is considered a swing trade. Now the second, or the third rather, is intraday. Intraday. And I'm sure this one, the definition is in the name. You know, you are trading within the day. Within the day. And then the final one we have is scalping. Scalping. These are people that trade from anywhere between seconds, which is very short, to minutes. I'm sure some people are loving this one right now. Because they're like, I don't have to wait at all. God, that's so profound. But remember, this is going to fit your personality. This is going to fit your psychology, who you are. If you are a very patient person, you will discover that the patterns you are finding in the market is something that fits the swing trading or the position trading. If you're a very patient person. If you find that you have a bit of activity or a bit of time within the day, you know, you can be an intraday trader. If you have maybe 2 hours within the day to look at the chart. So maybe you have a part-time job. If you have a full-time job, you must be a swing trader. You must be a position trader. If you have a full-time job. If you have a part-time job, you can find yourself being an intraday trader. Are we following? And if you want to take trading full-time, you can do any of these. You can either be a scalper, you can be an intraday trader, you can be a swing trader or a position trader. If trading is your thing full-time. But if you are going to be a part-time trader, it's intraday. If you're going to be a full-time, if you're going to be a part-time worker, it's swing trading and position trading. So when you go back and you're creating your edge, focus on these things. It's very important. I'm giving you guys the secret now. I'm giving you for free. These are things that people pay almost $500 to learn. Basic things. And it pains me sometimes because this is basic information. Any one of you here can create an edge. Any one of you, you are smart enough to do it. Yes, go to the market, observe a pattern, and create an edge. And then build around that edge. Build around it. If you want to put indicators around that edge. If you want to use sessions, we talked about sessions. Tokyo session, the New York session, the Japan session, the session in Tokyo, the session in Sydney, the session in Frankfurt, Germany. Build around it, and you create an edge. This is very important. Now, we're going to be going into the advanced person. But are we following tonight? It's very important that we follow. Very important. Because, I'm going to break records this night. You know, I wish the Guinness World Record was here. We're about to break some records this night. Now, this is it. We're going to be going into the advanced persons. The advanced person. Now, we're not going to waste so much time here because it's pretty straightforward. I love the advanced things. I myself, I am an expert in the market, not just a professional. So I love anything that deals with the advanced people. Now, in this advanced section, we've talked about, for the beginners, we have laid the foundation and the groundwork to trading. For the intermediate people, we have talked about the importance of value, and we'll have looked at some core concepts in the market that can help you build a strategy and also implement it in the market. We've talked about the use of stop losses. We've talked about contract sizes, positions. We've also talked about risk management. But now we're going to cover something different, which is one of the core things for this evening. Proprietary firms. Proprietary firms. Proprietary firms. I want you to write that down. Proprietary firms. Now, before we dive into looking at proprietary firms, I want us to examine this list we wrote here, because this list is for professionals. Now, by the time you're able to find your strategy, by the time you're able to learn a strategy from an expert, and you use stop losses and take profits, you will fall into one of two categories. And I'm going to describe it so that while you are building your strategy, you can also be thinking about this. Put it behind your mind. You're going to fall into one of two categories. The first is, you risk a little to get a lot. To get a lot. That's the first category. And under this first category, you will get a lot few times. Are we following? This is the first category when you are building your strategy, because now we're in the advanced section. You risk a little to get a lot, which means you are risking very small to get a whole lot. And this is the average retail system. Every retail strategy flows that way. You risk a little to get a lot. And it makes sense. I'm not saying it's bad. It makes sense. You risk a little to get a lot. But you must know. I'm telling you now so that when you go to create a strategy, you must know that that's what you're going to encounter. You are risking a little to get a lot, but you will get this a lot very few times. But when you get that a lot, it will cover for all the losses you've made. All the little losses you made. So I'll show you what your chart is going to look like when you begin to trade with a profitable retail system that follows this first route. Your chart is going to look like this. -1, -1, -1, -1, +10. another negative 1, negative 1, negative 1. Are we following? But when you make your wins are going to be bigger than your losses. Way bigger than your losses. We call that risk to reward. It's called risk to reward. So you are risking a little to get a lot. Your reward is a lot. That's the first side you find yourself falling on. Because you must fall into one of the sides. We won't need to talk about the first. But you must also know it's not a compromise. If you are going to risk a little to get a lot, you will lose that little a lot of times. But when you get a lot, it will be very large. Are we following? You must choose a side. I am the only trader in the world that has found a middle. And we're going to talk about the middle during the workshop. But when you go to create a strategy, you must fall on one of these sides. Either you are risking a little to get a lot, but you are ready. You must be ready. Because I'm saying you must be ready because even when you find your edge, that's what is going to be happening. I don't want you to go and find your edge and it works. And you're like, this edge works. But then you now start looking and then the second day, the edge makes a loss. The third day, the edge makes a loss. The fourth day, you're like, this doesn't work. No, it works. But when you get your wins should be bigger. Do we understand? When you are building your edge, this is a very important component to put in there. Very important. Because as a retail trader, you will have losses. You will. Because that's why you're limiting your losses. So in case the market goes against you, not in your favor, you exit with a loss. 1% of your account. If you are trading a $2,000 account, that's what? That's how much? $2. It's not a lot of money. So always 1% of your account. But if you want to make a win, your win must be what? $5, $10, $20, $15. Are we following? But because you are taking that little risk, you will be taking that risk a lot of times. And you will be making those big wins a very few times. Because that's the way the market works. It has what we call distribution of trades. Distribution. You cannot be right all the time. But when you are wrong, how are you wrong? It's very important. So if you are wrong in a very little way, you will be taking those little wrongs a lot. Or you'll be taking the wins. When you take the wins, they will be larger. Now there's a second part of this equation, which is you risk a lot. I don't know what is going to like this one, but it works. It works. You risk a lot to get a little. But you get this little often. Are we understanding this equation? So you can choose to risk a lot. You risk a lot. So when you take your risk, it's big. And you are going just for getting a little. So when you go for that, you will discover that you will be getting that your little very often. It will be happening very quick. But when you take the loss will be what? Bigger. Are we following? So this is what your order book is going to look like. We've drawn what this one looks like. Let's draw what the other one looks like. So in this other one, you are doing plus 5, plus 5, plus 5, plus 5, plus 5. Then you have another plus 5, plus 5. Now, you're seeing a lot of plus, right? But what you are risking is negative 20. Do you understand? But in this one, your accuracy is high. But your risk is larger. In this one, your accuracy is very low. But your risk is smaller. Do you understand? So while creating your method, you must focus on one of these. Because after this negative 20, you will have another what? Plus what? Plus 5, plus 5. And when you calculate the net amount, you will be in what? Positive. Do you understand? Same thing with the other side. We're having minus 1, minus 1, minus 1, and then you have plus 20. So it covers for all the losses you have been making and some extra. Are we following? So net gain will always be positive. Are you following? These are two key things you must note. Because when you go home now, you start trying to apply your edge with what I've taught you, you will discover that one of these two things will start happening. The moment it starts happening, focus on this second part. The second parameter. Am I trying to get a lot, but very few times? Or am I trying to get little, but very often? Because one of these two will happen. Right? In the workshop, we will teach you that there is a middle. A very difficult middle, but it's possible. I've done it in the last 7 years. I'll show you the middle. There is a middle. But you can create any of this. But you must always fall on either side. Always. When you are creating a strategy, you must fall on either side. That's how you create an edge. Your edge must be either very accurate, but you are risking a lot. Or your inaccuracy is low. Your accuracy is very low. But you make great gains. You make large gains. Does this make sense? This is how the FX market works. You must be on one side or the other. Now, this is very important. This is very, very key in succeeding in the markets. Now, this is what I want to show you guys. Proprietary firms. one of the biggest things we want to discuss this evening. Proprietary firms. Let's look at why they are interesting. Proprietary firms. Now, proprietary firms are simply, I want to define them, they are firms that give us capital to manage for a small fee. Proprietary firms are firms that gives us capital to manage for a small fee. Now, this is one of the biggest things I want us to talk about for this evening. And the thing that the proprietary firms need to give you their money to manage is called skill. Somebody say skill. Skill. That's why in the intermediate session we spoke about value. Do you remember us speaking about value? We spoke about value. You must have skill in order for these people to give you their money to manage. But if you have that skill, you shorten your curve in this investing industry. Because when I started, I had to do it the hard way. There were no proprietary firms. But this is one of the major things we want to talk about this evening. Proprietary firms. You go outside, you're going to see some of their banners out there. Proprietary firms. I've worked with at least 2 of them. They give you capital to money. I'm talking about heavy capital. Heavy capital. For a price of $100 to $99, you can manage as much as $10,000. For about $300, you can manage about $50,000. And for about $500, you can manage up to $100,000. Does this make sense? Proprietary firms give you their money to do what? To manage. But in order for them to trust you with their money to manage, you must be a very good trader. Because they're going to test you out 2 times. The first test is for you to pass a phase 1 challenge, and I'm going to give you the details. Because this is one of the biggest things I want us to talk about this night. Before we go to this list. Biggest things I want us to talk about this night. Proprietary firms. One of the life-changing things that has happened in the year 2023. Proprietary firms. And I've worked with them and I've made withdrawals from them. And they pay you. Very easy. They send the money to your crypto account. Very convenient, isn't it? Very convenient. But you need something. Somebody say skill. You need what? Skill. Now, the proprietary firms have 3 very important rules that I want you to take home this night, so that you can, when you start building your method, you work on it. Now, in the workshop, we're going to give strategies. We'll give strategies. But I want you to write down these 3 things. The first is they have a daily drawdown limit, which you must not breach. A daily drawdown limit. They have a maximum total drawdown limit. And finally, they have a target. Is this looking similar to what we discussed here? With the stop losses and the take profit? Is it looking similar? A daily drawdown limit, which is maximum. We have the maximum drawdown limit, which is still the SL. And then we have the target, which is the take profit. Is it looking the same as our retail trading? Because proprietary firms require you to trade retail. Do we understand that? They require you to trade retail. 3 things you must look out for. Daily drawdown limits, they usually put this at 5%. You cannot lose more than 5% in a day. Maximum drawdown is usually 10%. You cannot maximum overall lose more than 10% of your account. And the target for phase 1, they always give you a 10% target to make. You need to make a profit of 10%. And phase 2, you need to make a profit of 5%. And once you can do these 2 things successfully, they give you 90 days to accomplish this. 90 days. They gave me also, as with everyone that buys the account, 90 days to accomplish it. I accomplished it in 2 weeks. And I did it twice, not just once. First one with a 100K account, the second one with a $50,000 account. And I have the contracts. But even better, I'm going to show you the withdrawals from these accounts. But before we go into that, I want you to understand that this is the new opportunity for this generation. Back in the days when I started trading, in 2017, in 2016, I had to do it the hard way because there were no proprietary firms. No, they were not a popular thing at that time. So I had to do it the difficult way. I know some of us drive here. You know, when you learn to drive stick and the way you learn to drive automatic, they are different. Is that not so? One of them is harder than the other. That's how we had to do it. I had to do it the hard way, which was taking a $500 account in 1 year to $10,000. Which started my professional journey, attracted accredited investors, and then I had my first 20,000 euros to manage. But I had to do it the hard way. There were no proprietary firms. No, you had to build capital by the law of compounding. Putting your profit back into the market, reinvesting it. And for those of us that were here in the Wealth Seminar, I taught you how to do that. I had to do it the hard way, reinvesting. But now you guys have proprietary firms. I don't want you to play with this. This is the new money of this generation. They are giving you their own money. They are bearing all the risk. All you have to do is pay to access that account. That's all. You pay to access that account. And if, I'll repeat it again, that's why I spend so much time in talking about the importance of value. If you have the skill to pass their challenges, they give you what? The account. Are we following? If you have the skill to pass the challenges, they give you what? The account. So these are the new money of our industry. This is the new money in the FX market. Proprietary firms. If you say right now, you're seated here and you're like, I don't have the capital to get started in trading. What is your answer? Proprietary firms. Are we following? Proprietary firms. That's why I took time to teach you how to create strategies. Because when you go to trade with a proprietary firm, you need a strategy. Are we following? Because there are only two areas of trading. We said the first is what? Retail what? Retail trading. And the second is what? Professional trading. Professional. So when you go to trade with a prop firm, you can't trade professional because you must follow their rules. So you trade with a stop loss and a take profit. You use a strategy, but now we come to the part because the last thing we have to discuss this evening is the road to 7 figures. That's the last topic we have. For those of us that check the brochure on our tickets, the last thing we have tonight is the road for 7 figures. I'm going to go to my computer and show you the road to what? 7 figures. But before we get there, 3 of these things are beautiful. You trade with a stop loss and take profit. 1 to limit your loss. 1 to take you out of a profit. You use a strategy created by yourself or given by a professional like me in a workshop, which we're going to do in the next week coming, in the next 1 week. And then we see one flaw in the retail strategy. There is a flaw in it. That's why even I as a professional, if I apply a retail strategy, it's only to proprietary firms. Only to proprietary firms. Or personal finance, if you want to manage personal money. Because when you are using this, you cannot use it to manage another person's account. You cannot use it to trade professionally because of this last flaw, which is you have to update the strategy. And I want to explain why that happens. The FX market is seasonal. It has character, it has behavior, it's like the weather. It changes. So the environment is never the same. It never stays the same. So when you have a strategy, it can work for 6 months. Your strategy can even work for 1 year. But at some point in time, a strategy stops working. Are we following? Tonight, I'm exposing the biggest secret in the world because nobody will come out and publicly say this because they want to sell courses. A strategy will always stop working because it is subject to the market environment. Remember, when you are creating a strategy, you need to find an edge. Is that so? A pattern that does what? Repeats itself. But now the market updates. So by the time you find that pattern, in the next 6 months, that pattern might not be there anymore. So you need to go back to the drawing board. And how do you even find out that your strategy is no longer working? You will start making a lot of losses. And you cannot start telling an investor, I'm making so many losses with your money. They're not going to hear that. That's why you use this alone for personal finance. Or, better still, to pass what? Prop firm challenges. Are we following? You don't use that to manage other people's money. Never do it. You only trade professionally if you want to do that. But personal finance. Because if you start noticing that normally in a week you make a decent amount of profit, maybe $200, $300, and now you are making only $50, your strategy is changing. Are we following? Your strategy is changing. You need to go to the drawing board and readjust the parameters of your strategy. Looking at the new market environment. Because in that month, the market environment might have changed. In that quarter, the market environment might have changed. In that half of an annual cycle of the year, 6 months, the market environment might have changed. You must pay attention to these things. And that is where a strategy, a retail strategy, becomes very rigorous. Because in doing this, you must go back home, you must go back to the drawing board and retest, rearrange, reconstruct your strategy. You must do all this. And it takes a lot of time to do. Minimum of 3 months to readjust the strategy. Because in those 3 months, you will be testing it in the new environment to see if your adjustments do what? Work. Are we following? You need to test it in a new environment. This adjustment I just made to my strategy, does it work? Because my strategy stopped working. It can take as long, I'm telling you because I have the experience. A strategy can take as long as 1 year and a half before it stops working. 1 year and a half. You are trading it successfully and then eventually it stops working. But because the way I'm built, I love pushing the boundaries of what I know. So I realized that retail trading cannot be everything. Because the professionals don't change their strategy. And they manage billions of dollars with it. They are consistent. And every year they are making profits. Every year on CNN, CNBC, BBC channel, on all the major news outlets, they always announce that 97% of people lose their money in the markets. 3% make money. What are those 3% doing? I want to know what they are doing. Because guess what? In some months it changes. It becomes 95% and 5%. But what are the top percent doing? Now, sometimes with a retail strategy, you can enter into the top percent. Yes, you can. Trading your own money or even passing prop-firm challenges. But a time will come when you need to update it. So if you're not willing to update, that's something that takes a lot of time, at least 3 months, you need a professional strategy. In fact, in the professional, we don't even use strategy, we use what? Methods. And I will show you this night. We also trade without stop losses. This is a concept that I have been criticized for. People have said all manner of things about me, but it works. Trading without stop losses. I've done it for the last 5 years, and it works. But nobody can trade like this except an FX operator. You must be a professional trader, and it takes a lot of time. But why I'm dividing these two, for you to also see that in professional, we also never update our strategies, is so that you know the approach you are using when you go to proprietary firms. Are you understanding this? When you go to prop-firm challenges, because these are the people that can give you the capital you need to manage. Are we following? They can give you the money. They can give you the assets for a little amount of money. That little that you say you have, you can do a lot with it, but you need a proprietary firm. Are we following? You need, it's not a want, you need a proprietary firm because they will give you the capital you need. But in order to pass their challenge, you need skill. You need value in you. You need to know how to trade. Do we understand this? You need to know, you need to have an edge. You need to have an edge that works. I need to put that part because it's very important. You can go home and create an edge and over a 1 week span it works. But then you test it for 1 month and it doesn't work. You need an edge that works consistently. Month in, month out. That is how you are able to pass the proprietary firm challenge. Are we following? Because these people give you money to what? To manage. So they bear all the risk. Tens of thousands. I think the lowest amount they give is $10,000. The minimum. They give all the way up to $400,000. All the way up to $400,000. And then you don't have to, nobody is limiting you. You don't have to open only one prop-firm account. Right now I'm trading with at least 3 of them. You can have a combined net worth of almost $1.1 million. Are we following? But this is the new money of this generation. In my time of trading, I didn't have this. I didn't. But when it came in vogue, because I have skill, I approached them and what did I do? I passed the challenge. And I'm going to show you tonight. I'll show you tonight. But I want you to know why these guys are the biggest opportunity in this time. Do not play with them. Do not play with proprietary firms. They are the new key to accessing capital. Because a lot of things that hold a lot of traders down is what? Capital. They are the new key. Now, it doesn't mean you cannot build your own capital from small. But you need a lot of patience. Are we following? You need a lot of patience. Because you need to be compounding it. You need to be compounding it. And keep compounding it. And keep compounding it. That's how you build capital with your own finance. You need to compound. You must follow the law of compounding. If not, every month you'll be getting the same income. If you withdraw it, you get the same income. Without reinvesting. Now, doesn't mean you cannot reinvest it and then take a part of it. But you cannot withdraw everything. Because if you withdraw everything, that guarantees that the next month you are withdrawing the same what? The same amount. Are we following? Are you learning something? So, if you want to build your own personal finance, you need a long time. You need patience. And time is of the essence to us as human beings. Is that not so? So why not go with what? Proprietary firms. Is this making sense? So we have retail trading and professional trading. It's never, there's no third one. There is no third. It's only retail trading and professional trading. You are either on one of the sides. Now, as fortunate as you guys are this evening, I've been on both. Are we here? I've been on what? On both. I still use both, but for different reasons. Do we follow? You want to manage money professionally, you need this. You want to trade with prop firms, you need this. I'm going to show you guys now live exactly what it looks like. Now, before we conclude, the last thing we want to talk about now is skill, which I'm sure we have pondered on for very long. Very long. I'm going to just say one thing. Just one word. One word about skill. The word skill that we hear all the time. Skill, 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 skill. I'm sure some of us have heard those words when we were young. We heard it growing up. We heard it from our parents. Skill is the only thing, and I will say this only once. Skill is the only thing that attracts wealth to you. The only thing. There is no other. And from our teaching on Tuesday, our wealth seminar, we said that the formula for wealth is what? Is it chasing money or money chasing you? Which is it? Money doing what? Chasing you. So if we know for a fact that skill is the only way that money is going to chase you or resources is going to chase you, then the question is simple, right? Is to go and get what? Skill. Does that make sense? If skill is the only way that resources is going to chase after you, the answer is simple. Go and get what? Skill. That's why I love seminars. Seminars is the time you download yourself with skill and information. So now we've done a lot of teaching. Let's do a lot of showing. I want to show you now what skill can do. Now I need an usher to stand by the side of the board. I need an usher to stand by the side of the board. We're going to see what skill can achieve. And in a few seconds, we're going to be breaking some Guinness World Records. Skill. What can skill accomplish? We're going to look at what skill can accomplish tonight. What skill can accomplish. Because this is the last point that we're going to deliberate on this evening, which is the path to 7 figures. The path to 7 figures. The path to 7 figures. Because I want to make sure, because I'm a man of my word, I want to make sure I show you the path tonight. I want to make sure I show you the path. Now, what I'm going to do quickly is I'm going to share my screen, and I hope everybody is recording because we are about to make history right now. I'm going to share my screen, and everything I've taught you tonight, I'm going to show you live right now. I'm going to share my screen shortly. All right, can we all see my screen? Can we all see my screen? All right, beautiful. Now, I'm going to show you live. Now, we're going to begin with actually the prop firm, the proprietary firm. I want us to begin with the proprietary firm. Now, can we see what is on the screen clearly? Yes? Can we see that there, up there? It says what? The what? Funded trader. Royal Challenge what? Funded. Now, for those of us that don't know my name is what? Caleb what? Ukoha. And can we tell that this is a live account? I'm going to scroll up so that you can see this. Is this a live account? So that you don't think this is a picture. This is a live account. We're going to be making some history right now. Now, we are looking at the paths to 7 figures. Now, I'm going to quickly just go into the history of the charts. I'm going to go into the history of the charts. Now, I want you to look at what the amount is that has been withdrawn from this proprietary firm by me, by myself standing here. This says 3,759 US dollars. Can we see that there? 3,000 what? 700 and what? $59. Now I want the usher to convert that amount. Let's see what that amount is in TL. I'm curious. What is $3,759? Please convert that for us quickly. And write it on the screen. Take a black pen and write it on the screen. Because I want to show you the path to 7 figures. This is a month. Now remember, this company pays me loyalties. They pay me loyalties for being part of them. $25 for doing analysis for them. They pay me $50 for posting videos of my trades. So I'm not even working. What I traded for them, they pay me for posting it. That's it. So this is minus all the loyalties that this prop firm is paying me. And I want you to realize this challenge was passed in 2 weeks. This is a $50,000 account. 2 weeks. They gave me 95 days. I want to show you the importance of value. Yes. So what figure do we have there? 78 what? 78,000. Brilliant. Brilliant. 78,000. Okay. Let's keep going. Let's keep going. So now I want us to go to a personal account. Now I'll open one trade here. I can choose any trade at random. Can we see the screen? I can choose any trade at random. Now do we see below here that there is a stop loss there? Can we see the stop loss that we discussed this evening? Can we also see a take profit as well? Good. We can see swaps. We can see charges. So which means when we come into the proprietary firm, we trade with stop losses. We trade with stop loss. You can see the stop loss there. Every single trade has a stop loss because we are trading a strategy with a proprietary firm. A strategy. Now, I want to show you an account also that is a professional account because I want you to know that this is a live account. You can see there, 8cap live. It's a live account. So it's real money. The firm gives you real money to do what? To manage. Real money. Now, I want us to go into a live account. A live account. And this one is so interesting. This one is really interesting. Very interesting. Very interesting. I love this one. Now, this account is an account that, because for company purposes and for policies, I can't share any of the company's accounts, only to partners and shareholders. Now, I want to show you an account that I used to train someone. Because this account was opened in the 14th of April. And originally, I didn't want to open this account. That was not my intention. But when I opened it, the plan was to train someone. Because when I train my trainees and my mentees, I train them live. Especially the ones I train professionally. I train them live. They have to be taking the same trades I'm taking. They have to make withdrawals on Friday. Because when they make withdrawals on Friday, they understand that the market is not a game. Any money you earn from the market, you can actually use it to solve real life problems. So by the time they come the next week, because I understand how psychology works, they trading serious, like a business. Are we following? Because now they have taken the money from trading to go and pay their rent, to go and pay their bills. So when they're coming the next week, they ain't playing. Are we following? So I understand how psychology works, and all this is because of experience. All this is because of experience. So now, this is an account I used to train him, from the middle of April, I think the 14th of April. We're gonna look at the results from the 14th of April. Let's see, from the 14th, because that's when his training began. This is a training. I want to make it very clear. A training account. The deposit on this account was exactly $200. And the reason I did this was so that anybody that says that you need so much capital to get started in trading, they are lying to you. Even if you want to do it yourself, you don't need so much capital. If you decide that your capital is not enough, you can go with proprietary firms. Did I show you proprietary firms? The account you saw was purchased with only $200 or $300. But what was the gain on it? 3,000 what? 3,700 and something. Which amounts to what? 70-something thousand what? TL. So you can go the route of prop firms if you don't have the capital for yourself. But I want to show you something more interesting. Now we are going to professional trading. Because this is someone that I trained myself professionally. This is the account I used to train him. Now when I was done with his training after 3 weeks, this account was sitting at exactly 150% gain. Now I don't know how many of us here have traded before. You've traded before, you've opened the chart, you've taken a couple of trades. Can you wave your hand? If you've taken a trade before, you've ever traded, okay? I see my brother there. I can see another person there. I can see another person there. Brilliant. Now, what is the highest percentage? And I want you to say it out. I'll start with you. What's the highest percentage you've ever seen someone make in trading? The highest percentage. Can you tell us? That you've ever seen. What's the highest percentage? In a month, in fact, a month and 2 weeks. What's the highest percentage you've ever seen? Yes, you can give him the mic, please. What's the highest percentage you've ever seen? In a month and 2 weeks. 200%. Brilliant. Now let's move to the next person, please. Yes. Our brother in front, the one with the black dress. The one with the black dress. Yes. He's traded as well. What's the highest percentage you've ever seen in a month and 2 weeks?
I've seen 160.
160%. Brilliant. And then the next person, she's also traded. 100%. Brilliant. Now, why I'm asking them to go round is because after training this my student for, remember, it's a professional training. A professional training. Remember, I'm not training him retail because retail is a different thing altogether. Professional is also different. Now, I'm sure the people you saw that made about 200%, they were using stop losses, right? Good. The person you saw that made 160%, they were using stop losses, right? Good. Now, the person you also saw using 100%, they were using stop losses, right? Perfect. I need to establish that because what I'm about to show you now, we are about to break live. We're about to break the Guinness World Record because this is the highest percentage ever made on an account without using stop losses. People told me it was impossible. Some people even told me what I'm about to do is crazy 4 years ago. But I said, you know what? I'm going to prove them wrong. Because professionals don't use stop losses. Warren Buffett doesn't take a trade and place a stop loss. No, he doesn't. We do something different. Now, this is an account of me training someone. When I train people, I train them live. I tell them to come on live, put on their computer. In fact, right now as we're speaking, one of my students is watching this. One of my professional students is watching this. Because when you train people, you need to show them how things work. Not leave them hanging. So whether it's retail method or professional, it must be the same routine. Now, I want you to see, because this is an account that had several other account transfers into it. But I want you to see the withdrawal on the account. What's the withdrawal on the account, please? What does it say there? 8,000 what? 600 and what? $2. Can you convert that for me in XC? Because we are in the topic of the road to $1 million. The road to $1 million. I want you to convert that for me. 8,602 converted to TL. I mean, it's TL we use on the island, right? It's TL. Good. I want to establish that. It's TL we use. So $8,602, what is that in TL? Convert that for me quickly. $179. Now I want you to add those two figures together because we saw the withdrawals from the proprietary firm, right? We also saw the withdrawals from what? This account. Now I want to show us that it's a live account. Can you see my name there? Is it the same name? Did the name change? Still my name. Is this a live account? Good. This is a live account. I want you to look at the balance. Oh, this is beautiful. This could have gone any better. Now look at the balance. What's the balance? 200 what? Dollars. I did this to prove to people once and for all. And I will show you right now, live, I will show you the percentage gain on this account. Something that nobody in the world has ever achieved without using a stop loss. Let's go to the stop losses and see. Let's verify. Can we see a stop loss there? No, there is no stop loss. Let's open another one. Can we see a stop loss there? No, there's no stop loss. Let's open another one. Can we see a stop loss there? I'm picking them at random. Now, what I'm even going to do is I'm going to go to the actual chart. I'm going to go to the actual chart on the MT4 platform, and I want us to see the whole trades. Let's go to the charts. Can we see the balance there? What does it say? $200. That's $200. Good. Beautiful. Now, I want you to look at the account history. Now, for those that know about account statements, this is the row or the column where we see the stop losses. Can you see that that's reading zero everywhere? Can we see that? Can you see the consistency in the... This is the order book. This is what we call it in trading, the order book. I want you to watch the consistency. There is no stop loss in any single position. Any of the position. Now, on this chart, live right now, I want to show us the percentage gain on this account. Something that has never been achieved before. Never been achieved before. My FX book is a site where we connect to show the data of the trading, and I'm going to show you that the trading privileges here are live. I've already shown you the balance from the account, but I also want you to see that it's a live account. Now, do we see this? This said the track record is what? Verified. Can we see that? Track record is what? Verified. Trading privileges is what? Verified. Good. Now, I want us to look at the percentage gain on this account. For those of us that are watching, what is the percentage gain there? 700 and what? 91 what? Percent. This is the power of professional trading. 791% in a matter of a month and 2 weeks. A month and 2 weeks. Never done before. But you see, when I did this, I didn't intend to do this. My plan was to teach the guy, train the guy. But we are already at 150%. And I said to myself, some people will say you need so much capital to start trading. Now, I want you to look at that board. Can you calculate the total amount there? What does it say for us? What's the total there? Yes. 200 and what? 57. 257,000. If you make that exact amount in a matter, because this is a month and 2 weeks. If you make that exact amount, because all this is in a month and 2 weeks. If you make that exact amount in 10 months, how much is that? Come on, we have mathematicians here. 2.7 what? Million. I've proved to you live. 7 figures is not hard to achieve. Do we see it? It's not difficult to achieve. 7 figures is not difficult to achieve. In 10 months, we're not even at a year yet. In 10 months, you can make 2-point-something million. I don't know if we like the sound of that. 2-point-something million in 10 months. Does that seem achievable now? Very achievable. Very achievable. This has never been done before. This, I'm going to even open the history here so that you can see it on the chart here, the history here. You can also see, these are the trades from this platform. This is the most verified platform in the world, my FX book. My FX book is the most verified platform in the world. I want you to look at the rows. There are no stop losses. This has never been done before. It's 791% on an account without using stop losses to prove that it can be done consistently. This is the power of professional trading. So I want to tell you tonight, because I said the last thing I want to discuss is skill. Skill is the only thing that can change your life. Nothing else. Let nobody lie to you. What differentiates one man from another is the content of what they know. Are we following? You were born in the same background, you knew the same thing, you went to the same schools, you had the same friends. But what you know is still lacking, you will find yourself falling short. What you know is what makes you great. What you know is what makes you successful. What you know is what increases you. What you know is what imputes more value into you. And I've had people from the UK, I've had people from US, I've had people from Italy come all the way here to look for me, to do business. Why? It's not because of my degree. It's good to stay in school. Make sure you get your degree. Very important. I said that. Get your degree. But what they were looking for me for was value. Somebody say value. Value. You need to impute value into yourself. Become a man of value. Become a woman of value. And men will seek you. They will look out for you. In fact, that value in you makes you independent. Because you don't even need men seeking you to become successful. Are we following? You on yourself become so valuable that you become successful. And then men seek after that success. They seek after that greatness. I've worked with several companies, including this preference we're talking about. I want to even show you guys something interesting. I already have 115,000 in funding, but I want to show you another account I passed yesterday. I want you to see how many trades it took me. They gave me 35 days to pass the account. 35 days. I want you to see how many trades I took. How many? This is a 200K account, and I'll get the funded account. Because why? I got what? Skill. This night is not about me. It's about showing you what is possible. Because the theme of this program is the possibilities of the Forex market. From one market, I started 5 businesses. 5 businesses, each of which I laid out for you guys. It's about seeing opportunity and being able to maximize it. I want to show you the account. It's called True Forex Fund. The other company is called TFT, the funded trader, which I showed you. I want to log into this account live right now and show you right now the 200K account and watch how many trades it took me to pass this account. Something that people find impossible to do. A $200,000 account. Okay, let's verify first of all that this is my name. Is that my name up there? Can we see that? Is that my name? Let me zoom in a little bit so we see it a bit clearer. Good. So that's my name, right? Caleb. It's still the same name. Now I want you to see the statistics on this account. The account statistics. This is a past challenge. You can see the information there, right? It says congratulations. You have successfully done what? Passed our phase 1 challenge. Please make sure you have closed all your open positions. We'll review your trades and contact you soon. After they did that, they sent me my details for the phase 2. Look at how many trades it took me. I want you to see this. This is a total of 1, 2, 3, 4, 5. This is a different proprietary firm. Because I know some people will say, maybe I have a liaison with those other proprietary firms. That's why I got 150,000 in funding. I did another proprietary. This was 1 week ago. What I'm showing you now is 1 week ago. And I've already passed that phase 1 for a 200K account. A 200,000 account. Before the end of this month, I will be funded 350,000. But what gives me the access to all this? It's what? Value. Somebody say value. Value. It's all about what I do what? No. It's what I know. It's no strange thing. It's what I know. And every single one of us seated here can know the same thing. Are we following? Isn't that powerful? That every single one of you can know the same thing. So tonight I want to round up on this note. On this simple note. There is no mountain too high to climb. There is no place too difficult to reach to. All you need is care and confidence. You need knowledge and patience. You need skill and the ability to manage your risk. In life, in anything you do, manage your risk. Make calculated decisions. Calculated decisions. Because when you are taking calculated risk, you can make educated decisions. Are we following? So whatever you do in life, make educated decisions. Because all over social media, what I've done now is what people say is impossible. Because I know for a fact, I will start a trend. I'm sure of it. I can guarantee you, mark this night. I will start a trend, which is trading without stop losses. People in the world have said it's impossible to do. I've been doing it for the last 4 years to 5 years successfully. And I prove it to you right here. I didn't even mean to do it. To make 791%. It's the highest percentage I've ever made in my career in a month and 2 weeks. But I decided, you know what, let me zone on this capital. Let me zone in on it and show people what $200 can do with the right what? Knowledge. Consistently. There was no one position that had a stop loss. Not even one. Consistently. What people said is impossible. Tonight, I want you to be motivated to know that great men are ordinary men, but with extraordinary determination. Nobody should ever tell you what you can or can't do. My aim and goal with this program is to create only 1 millionaire. And by the end of this month, by the end of next month, before August, I will successfully build 1 millionaire. Now, if I create a couple, I'm fine with it. If I create 2 or 3, I'm okay with it. But I want you to know what my goal is. The agenda that has been given to me is to create 1 millionaire. And by the grace of God, surely I will do it. Thank you so much for your time, and God bless you all.